Now that we've explored the supermarket of stocks, let's shift our focus to another important aspect of this financial marketplace: the stock market indices. Think of these indices as the price tags in our supermarket analogy. They provide an overview of the market's performance at a glance. In the United States, some of the most popular indices include the Dow Jones Industrial Average, the S&P 500, and the Nasdaq. Each of these indices represents a different segment of the U.S. stock market and reflects the performance of select companies. For instance, the Dow Jones Industrial Average includes 30 large, publicly owned companies based in the United States. The S&P 500, on the other hand, represents 500 of the largest companies listed on the stock exchanges in the US, and the Nasdaq includes companies from a broad range of industries with a heavy emphasis on technology companies. In India, the major indices are the BSE Sensex and the NSE Nifty. These are similar to the indices in the US, representing the performance of select companies listed on the Bombay Stock Exchange and the National Stock Exchange, respectively. Investors use these indices to track market trends and make investment decisions. Just like how price tags guide your decisions in a supermarket, stock market indices guide investors in the financial supermarket. They help you understand whether the market is up or down and provide a benchmark for the performance of individual stocks or mutual funds. So, the next time you're navigating the financial supermarket, don't forget to check the price tags, or in other words, keep an eye on the stock market indices.